Good morning, everyone. Thank you for joining this mock meeting to discuss the recognition and measurement of property, plant, and equipment under NFRS 116. Our goal is to ensure that we have the clear understanding of the standard and have the importance of transparent and reliable financial recording. Let's start by going to the agenda. We will be discussing the critical for recognizing the new asset, their initiative measurement and subsequent measurement during their useful life. Farhana and Najwa, could you please to present to us the current situation we will be dealing with?
Sure, Ms. Goh. Our company has recently finished constructed a property by using the company's resources, which is direct materials 4 million, direct labor 900,000, and direct overhead 500,000. Besides, payment for engineer and architect fees were 100,000 and 150,000 respectively, while the material wastage is 80,000 and 50,000 of costs involved with infectious disease.
Our company also took out a bank loan of 5 million to support the construction, and interest charged by bank is 1% per annum. So the remaining balance of construction costs was paid by cash.
Given the situation we present, we dive into how this principle apply. To ensure we cover this thoroughly, I will assign each of you a specific aspect of the standard to outline. Farah, could you please to outline the critical for recognizing the new asset under the NFRS 116?
Of course, Mr. Screw, the criteria of recognizing PP under MFRS 116 are that the asset must be: the first criterion is that it should be profitable, the future economic benefits associated with the property will flow to the company. Next, the cost of the property must be capable of being measured reliably. And lastly, recognition occurs when the company obtains control over the property.
Thank you, Farah, for outlining recognition criteria. Fazana, could you please to explain how we should initially measure this asset based on NFRS 116?
Of course, by all means, according to MFRS 116, the costs include all expenditure that are directly attributable to bringing the asset to the location, and also the condition necessary for it to be capable of operating in the manner intended by management. This includes not just the purchase price of the asset, but also costs like legal fees, installation, and also any borrowing costs incurred during the construction and acquisition period.
Great, Fazana. So in our scenario, this will mean taking into account not only the direct cost, but also the engineer and architect fee and even the interest on the bank loan. Now, let's move on to the subsequent measurement during the useful life of this asset. Izzati, could you explain the option for subsequent measurement under the NFRS 116?
Alright, after initial recognition, assets can be accounted for using either the cost model or the revaluation model. Under the cost model, assets are carried at their cost less accumulated depreciation and any accumulated impairment losses. In contrast, under the revaluation model, assets are carried at their fair value with any revaluation surplus or deficit recognized in other comprehensive income.
Thank you, Izzati. So we have the flexibility to choose between this model, but it's crucial to maintain the consistency.
The most common method of subsequent measurement is the cost model. Under this concept, the asset is carried at its original cost, less accumulated depreciation and any impairment loss.
What about the revaluation model? When is that used?
The revaluation model is used when the fair value of the asset can be reliably measured. Under this concept, the asset is revalued to its fair value at each reporting date. But I think the cost model is the most appropriate method for our company, as we don't have the resources to regularly evaluate the asset.
I agree. The cost model is the simplest and the most conservative method.
Thank you all for the insightful discussion on the standard. To make sure we all on the clear, could someone please to summarize the key rules to recognizing and measuring the property under NFRS 116? Farah, could you please do this for us?
Very well. The property is recognized as an asset once certain conditions are met. like the future benefits, accurate cost measurement, and control over the property. Delving into initial measurements, we need to consider the cost of the property. These costs include not only the purchase price but also directly attributable costs like transportation and installations. We need to ensure that all costs related to getting the property ready for its intended use are included.
Thank you, Farah, for summarizing the recognition and initial measurement requirement under NFRS 116. The rules are essential for our financial reporting accuracy. Now, let's discuss the depreciation of the property.
I have a question. How will we depreciate the property? We will depreciate the property over its useful life. The useful life of the property is the period over which it is expected to be used by the entity.
How do we estimate the useful life of the property?
There are a number of factors that we need to consider when we want to estimate the useful life of the property, such as first, the expected physical wear and tear, next, the expected usage of the property, and also the technological developments that may affect the property.
So, based on our estimates, we believe the useful life of the property is 20 years.
I think that is a reasonable estimate.
That's right. So we will depreciate the property over a period of 20 years. Could someone tell us the methods used for depreciation?
There are a number of depreciation methods that we can choose from, such as the straight line method, the declining balance method, and the sum of the year digits method.
I see. What are the advantages and disadvantages of each method?
The straight line method is the simplest method and is the most commonly used method. It involves depreciating the asset evenly over its useful life. The declining balance method depreciates the asset at a higher rate in the early years and a lower rate in the later years. And lastly, the sum of the years digit method depreciates the asset using a formula that takes into account the asset useful life.
So, the depreciation method that we choose will depend on a number of factors, such as nature of asset, the expected pattern of consumption of the asset benefits, and the tax implication of the method.
I think we should use the straight line method for the property. It is the simplest method and it is the most consistent with the principle of matching costs with revenues.
I agree. The straight line method is the most conservative method and it will minimize the volatility of our earnings. So it has been a helpful discussion.
We will now go over the calculation of the cost of the building. The total cost of the building is 5,650,000 ringgit. This includes the direct material, direct labor, direct overhead, engineer fee, article fee, and bank loan.
However, we need to subtract the cost related to material wastage of 80,000 ringgit and the labor involved in dealing with infectious disease situation of 50,000 ringgit because they are not directly attributable to the construction of the property.
That's correct. And so, after this deduction, the cost of the property that we will recognize is 5,555,000 ringgit.
As for depreciation, we will allocate the cost evenly over 20 years using straight line method, spreading the expenses annually. This means that the depreciation for the first year will be 5,555,000 over with 20 years. So we will get the total 277,750 ringgit.
Thank you for that detailed breakdown. So now let's discuss the recognition and how we should measure it. Zeti, our audit committee representative, could you explain this further?
Of course, Najwa, recognition involves acknowledging the property as an asset on our financial statement when specific criteria are met. So in our case, the cost of RM 5,555,000 that we just calculated is what we should initially measure the property at. To measure the asset correctly, we start by compiling all the relevant costs directly incurred to make the property ready for its intended use. However, it is crucial to account for any costs that should be deducted, such as material wastage like earlier.
Excellent explanation, Izzati. As a team, we need to ensure that our calculated cost is accurate and that we understand how to recognize and measure it properly.
As we conclude this meeting, let's address the important matter of what should be disclosed in our financial statement regarding the construction of our property under the NFRS 116. Fazana, could you guide us to do this?
Yes, of course. By all means, firstly, we should clearly state the carried amount of the property, which is its initial cost, as well as any accumulated depreciation. In our case, the initial cost will be the total construction cost, which is 5,555,000. And for the first year, we will have to account for the depreciation, which is 277,750 ringgit.
The cost of the property will be recognized as an asset on the balance sheet, while the asset will be depreciated over its useful life. The depreciation expense will be recorded in the income statement each year with an estimation of 20 years.
And if there have been any significant changes in the value of the property, or if an impairment has occurred, these events should be disclosed. Transparency is key in communicating such material changes.
Thank you all for your valuable insight. It's clear that following the NFRS 116 is essential not only for compliance but also for maintaining a robust accounting system that accurately represents our financial position. Let's continue to work together to hold these standards and ensure the integrity of our financial reporting. Before we conclude our meeting, I would like to open the floor for any question and clarification. Please feel free to ask anything related to our discussion today.
I have a question. How does depreciation affect our financial statement, and how does it impact our bottom line?
That's a good question, Farhana. Depreciation, as we discussed, represents the allocations of the asset cost over its useful life. This allocation is recorded as an expense on our income statement, which reduces our net income. In this way, it accurately reflects the wear and tear of the property over the time.
I understand now. Thank you for that vital explanation, Farah.
Any other question or point of the clarification?
I'm also wondering, what are the consequences of not disclosing the relevant information?
If the company does not disclose the relevant information, it could mislead the user of the financial statements. This could lead to the user making an incorrect decision about the company.
Those are some good points. I think it's important for a company to comply with disclosure requirement in order to provide user with information they need to make informed decision.
Just to confirm, all these disclosure and measurements we have discussed today, they are essential for transparency and in line with MFRS 116, right? Absolutely, Farhana. Adhering to MFRS 116 is crucial for transparency and compliance, and the disclosure we have covered today actually are in line with those standards.
Great question and point. Now let's summarize the key takeaways from the meeting.
I would like to start. First of all, we got to discuss the criteria for recognizing and measuring new asset under MFRS 116. This includes the likelihood of future benefits, accurate cost measurements, and gaining control over the property. Furthermore, we also explored the requirements for initial measurements and gaining control over the property, emphasizing the importance of measuring the cost accurately.
Those are the very key points, Farhana. We will also able to dive into the topic of depreciation, highlighting the need to determine the appropriate depreciation method and useful life based on the factors like wear and tear, users, and related considerations.
Alongside, we calculated the cost of building and discussed the recognition and measurement in accordance with MFRS 116. Finally, we cover what we should disclose in our financial statement, including our accounting policy, carrying amount, restriction on use, and any significant change or impairments.
I appreciate the input, Najwa. Your insight and question has been instrumental in clarifying this important aspect of our financial reporting under the NFRS 116.
I am glad to participate in today's meaningful discussion with all the competent associates. I've learned a lot about our company's finance situation and the way it got handled.
Thank you for your time and participation. I'm confident that we have made a good process today. With that, I officially conclude this meeting. Have a good day, everyone.
Thank you.
Thank you.
Thank you. Have a good day.